Imagine a world where sending money across the globe is as easy as sending an email. What if your bank transactions were instant, secure, and transparent, with no middlemen involved? Sounds like science fiction? It's not. It's blockchain technology, and it's transforming the world of banking as we know it. Today, we're diving deep into how blockchain is set to revolutionize finance. Get ready to explore this game-changing technology. So, let's start with the basics. Blockchain might sound like tech jargon, but it's fundamentally changing the financial sector. Picture a ledger that's digital, decentralized, and immutable. That's blockchain, a system where every transaction is recorded across a network of computers in a way that's nearly impossible to alter once it's been added to the chain. This decentralized ledger ensures that no single entity has control over the entire network, making it incredibly secure and transparent. How does this technology impact banking? Traditionally, banks play several crucial roles. They handle transactions, maintain financial records, and ensure the security of these records. Blockchain technology offers an alternative by streamlining these processes in ways that can be faster, more transparent, and cost-effective. Let's break down the key benefits of blockchain and banking. Transparency. One of the most significant advantages of blockchain is its transparency. Every transaction recorded on a blockchain is visible to all participants in the network. This level of visibility can significantly reduce the potential for fraud and corruption. For example, if you make a transaction, it gets recorded on a public ledger, making it almost impossible for anyone to alter or fake it without detection. Efficiency. Cross-border payments are a classic example of how blockchain can enhance efficiency. Traditionally, transferring money between countries involves multiple intermediaries, each adding time and cost to the process. Blockchain can facilitate these transactions directly between parties, drastically reducing the time from days to just minutes and lowering transaction fees. Security. Security is a cornerstone of blockchain technology. Because blockchain transactions are encrypted and linked to previous transactions, altering any part of the blockchain requires changing all subsequent blocks. This makes the blockchain incredibly resistant to tampering and hacking. For banks, this means enhanced protection against fraud and cyber attacks, which are increasingly prevalent in the digital age. Cost reduction. Blockchain technology can eliminate the need for intermediaries, which are typically involved in processing transactions. By cutting out these middlemen, banks can reduce transaction costs and streamline administrative processes. This reduction in cost can be passed on to customers in the form of lower fees and better service. But let's dig deeper into how banks are already harnessing blockchain technology. It's not just about theory, real-world applications are happening right now. Smart contracts. These are self-executing contracts where the terms of the agreement are written directly into code. Smart contracts automatically enforce and execute the terms of a contract when predefined conditions are met. For example, a smart contract could automatically release payment once a shipment is confirmed, without needing any manual intervention. This automation can significantly reduce administrative overhead and minimize disputes. Digital currencies. Central banks and financial institutions around the world are exploring or already implementing blockchain-based digital currencies. Unlike traditional fiat currencies, these digital currencies are designed to be more efficient and secure. For instance, China's digital yuan, or digital currency electronic payment, DCEP, aims to make transactions more efficient and give the government better control over the monetary system. Similarly, other countries are investigating how digital currencies could enhance financial inclusion and streamline economic transactions. Trade finance. Blockchain is revolutionizing trade finance by providing a more transparent and secure way to track goods and verify transactions. In international trade, where multiple parties are involved, and documentation can be cumbersome and prone to errors, blockchain can simplify and secure these processes. For instance, a blockchain-based system can track the entire life cycle of a shipment from origin to destination, ensuring that all parties have access to the same, tamper-proof information. KYC and AML Compliance. Know your customer, KYC, and anti-money laundering, AML, regulations are critical for preventing financial crime. blockchain can streamline compliance by providing a secure, immutable record of transactions and customer identities. This can make it easier for banks to verify identities and monitor transactions for suspicious activities, ultimately enhancing regulatory compliance and reducing the risk of fraud. Lending and credit. Blockchain technology can also transform lending and credit. Traditional lending processes are often slow and involve significant paperwork and verification steps. Blockchain can streamline these processes by providing a secure, transparent way to verify borrower identities and track credit histories. This could lead to faster loan approvals and lower costs for both lenders and borrowers. Investment and asset management. Blockchain can simplify and secure the management of investments and assets. For instance, blockchain can be used to create digital tokens that represent ownership of real-world assets like real estate or art. These digital tokens can be traded on blockchain platforms, making it easier to invest in and manage assets. Additionally, blockchain can enhance transparency and reduce costs associated with managing investments, making the process more efficient. The road to integrating blockchain in banking isn't without challenges. Regulatory issues are a significant concern, as different countries have varying laws and regulations regarding blockchain technology. Banks must navigate these complex regulatory environments to ensure compliance while adopting blockchain solutions. Additionally, integrating blockchain with existing banking infrastructure can be complex and costly. Banks need to invest in new technologies and processes to fully leverage blockchain's potential. Despite these challenges, the potential benefits of blockchain are too significant to ignore. As technology continues to evolve and regulatory frameworks become more established, blockchain could play a central role in shaping the future of banking. By increasing transparency, efficiency, and security, blockchain has the potential to redefine how we think about money, transactions, and financial systems. As we look to the future, blockchain could also foster greater financial inclusion by making banking services more accessible to underserved populations. Imagine a world where anyone with a smartphone can access secure, low-cost financial services regardless of their location. This is a potential future enabled by blockchain technology, making financial services more inclusive and equitable. So, what do you think about blockchain's potential to revolutionize banking? Is it the future of finance, or just another tech buzzword? Share your thoughts and questions in the comments below. I'd love to hear what you think. Don't forget to like, subscribe, and hit that bell icon for more updates on the latest in finance and technology.